You're listening to the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.
Welcome to Volatility Views, the premier program for volatility traders. Each week, we'll take a deep dive into the world of volatility with in-depth analysis, trading activity reviews, strategy breakdowns, cutting-edge education, and much more. We'll also bring you exclusive conversations with the traders, researchers, and asset managers who are reshaping the volatility landscape. If it involves volatility, then you'll find it on Volatility Views. Volatility Views is brought to you by CBOE Live Vol. CBOE Live Vol is the leader in equity and index options trading technology, providing professional and retail traders with the most sophisticated options risk analysis, compliance, and trading tools. CBOE Live Vol offers a broad spectrum of advanced trading technology, including the Live Vol X, next generation execution platform, and Live Vol Pro, the new standard in options trading front ends. Visit livevol.com for a 15-day free trial today. And by Russell Investments, the home of Russell Indexes, which calculates approximately 700,000 benchmarks daily, covering 98% of the investable market globally, including more than 80 countries and more than 10,000 securities. Approximately $4.1 trillion in assets are benchmarked to Russell Indexes. For more information on Russell Indexes and RVX, please visit russell.com/indexes. And now, it's time to take a deep dive into the world of volatility. It's time for Volatility Views.
All right, everybody. That music means it's time once again for Volatility Views, the premier program for volatility traders. My name is Mark Longo from theoptionsinsider.com, as well as, of course, from the ever-exciting, at least we hope so, Options Insider Radio Network. Quite a few, a legion, a plethora, if you will, of programs for your downloading and streaming pleasure. The easiest way to find all that goodness, the mothership, theoptionsinsider.com. Hope you guys liked, in fact, I know a lot of you guys liked the content we had coming out from the OIC conference. A lot of it is up there, so if you missed the big shindig in Arizona a few weeks ago, you want to say, what was all that about? And maybe you want to check out a panel again or the legion of interviews we did down there. It's all up there for you. We even broke it out, made it even easier for you. Its own tab on our site. Just go to the homepage there, theoptionsinsider.com. You'll see the tabs on the top. One of them says OIC. Click on that. You have access to all of it right there. So if you're running around, you can just grab it. Of course, you can always find it in your favorite podcast stores, iTunes, TuneIn, Stitcher, so on and so forth. It's in the network feed. It's also, the interviews are in our interview feed, and they're also, of course, in our special events, our conference feed as well. So 3 places you guys can get those shows if you missed them. Check them out. I think they're kind of interesting, particularly if you listen to a show like this. A lot of stuff that gets into the deep weeds sometimes of the market structure, but it's important because it affects things like structural volatility at the end of the day. So check it out. Interesting stuff. And of course, as always, you guys can join us every week, noon Central, 1 p.m. Eastern, live via Mixlr, M-I-X-L-R. So if you haven't bookmarked or saved that link or followed us on Mixlr yet, go ahead and do so. Make your life a heck of a lot easier. Then you know exactly not when we go live, not just for this show, but for TWIFO and a little bit later today, or for Option Block earlier in the week, all the other shows we do live throughout the week. You get all of them second we go live. So check out that link and grab it. And of course, you can always grab our mobile app available on all the various platforms. And however you listen, live, after the fact, whatever you choose to do, hit us up. Questions, comments, insights, pearls of wisdom. We welcome them all. We do love to hear from you guys. And joining me on the program today, let's go around the horn. Let's go in order. Got to go in order of distance today, because I know for a fact who is the farthest this time. Sometimes it's a toss-up. But this time it's once again the traveling monkey. Actually, I should say the traveling honey badger over there at the CBOE. A lot of people took to your honey badger images last week, Russell, so I'm sure you got a kick out of that. Of course, Mr. Russell Rhodes, the Director of Education over there at the CBOE. He was not beaming in from the corner office this week, though. No, he's beaming in from the beach in Honolulu. Mr. Rhodes, you certainly get the award for distance beamed as well as determination to be on the show, because you're beaming in all the way from Honolulu. Well done, sir.
Well, the next time I'm in Chicago, I'm going to come into the studio and I'm going to bring a global map, and we're going to start putting little stickers on the map that show where I have been beaming in from for over the past 2.5 years or so that I've been doing this, because I'm pretty sure that I've got at least 3 continents under my belt talking to you.
It is a pretty impressive geographic distribution. You've also hit all of the major volatility hotspots. Where we got Honolulu, we've got Kamloops, we've got Krakow, and we got Mexico City. So am I missing anything that's...
I did do Mexico City. No, we did Singapore.
Oh, Singapore. Okay, so am I missing...
Yeah, I've done
When you
Singapore.
think volatility, those are the 4 places you think of, correct?
There's some sort of weird pattern that I will work on while I lay on the beach after I'm done talking to you today.
Everyone knows Krakow, Poland, and Kamloops, the 2K. They call them the twin Ks of the volatility scene, Krakow and Kamloops. How often have I cited those on this show? Every week, it seems like. It's getting old hat by now. Speaking of old hat, we still like him. He is the greasy meatball himself, Mr. Mark Sebastian, beaming in from, I believe, the global HQ of Carmen Line Capital. Heard an interesting debate the other day on, I think it was NPR, something about what exactly the Carmen Line is and what it means and what part of the atmosphere it actually falls under and where space begins. And apparently it's a very fluid science, but you should know that because you named your fund after it. Mr. Mark Sebastian, welcome back to the program, sir.
Hey, good to see you. And I'm actually in Riverside, one of the 10 towns that changed America, along with fellow Illinois city, Bronzeville. So, it's exciting to be here. I wish the market was a little more exciting. It is not. But that is the way things are right now.
Are you seeing me? Did you plant another spy camera in my studio, sir? Do I have to go take it down during the show? Are we going to do this again? Are you spying on us again, sir?
Me?
Yes.
Why would I be spying on you?
I don't know. You said you're seeing me, so you're confusing me and scaring me all at the same time.
I get what you mean.
You have been known to put some weird things in our studio in the past. We'll just leave it at that. All right. And last but not least, beaming in. Usually he'd get the award for distance, but not today. Mr. Rhodes has taken that hat, but he is joining us. And I think this is his first time on Volatility Views. Ophir Gottlieb, he's the founder over there at Capital Markets Laboratories. Ophir, welcome to Volatility Views.
Thank you. Happy to be here. And for a little bit of excitement, we may see a VIX 10-year low, depending on how wonky the market gets in the last few hours. So actually have something to look forward to today.
Yeah, there we go. We can all keep our fingers crossed for some historical data. I know Russell is. The man has never turned his nose up at some historical data points. And so today, even from the beach in Honolulu, that's the kind of guy he is. From the beach in Honolulu, he's probably tracking VIX with a laptop, watching for it to hit that single digits. Really quick, Ophir, you've been on some of our other programs in the past, never on Vol View. So really quick overview of your background in the vol space and what it is you guys do over there at Capital Markets Labs.
Sure. Yeah, I'm a former option market maker on NYC ARCA, CBOE. My background's in financial mathematics and machine learning, a lot of focus on options, where I did my graduate work at Stanford. I'm now running Capital Market Laboratories, and we're members of Thomson First Call, and our goal is pretty simple, just to empower every trader to have the same tools and information that are available to the top 0.1%. And so we have some option tools and an option back tester, which maybe we'll get into with the VXX today, and that's kind of what I'm doing.
Sounds good. A noble goal, bringing the education, the knowledge to the masses. We try to do that here on the old network as well. So let's get to it. It's time for the Volatility Review.
It's time to break down the latest developments in the volatility trading world. It's time for the Volatility Review.
All right, everybody, welcome to the Volatility Review. Like the man said, the portion of the show where we break down the week that was, and indeed still is, from a volatility trading and analysis and trending and research and breaking news and all that good stuff type developments. We are recording this and streaming it live noon Central, 1 p.m. Eastern here on Friday, June 2nd. Hard to believe we're already kicking off June here. But c'est la vie. We had the numbers this morning, perhaps a little bit disappointing at first, but the market appears to be shrugging that off. Most of the major indices up about exactly 0.3%, with the exception of the tech-heavy NASDAQ. That's up nearly a full percent, so little love on the old tech side today. And, of course, as Ophir alluded to earlier, all that green on the screen means a little bit of red in VIX Cash land. We are flirting with some, shall we say, historic levels right now, hitting about 977 or so, off about a little over 1/10 of a point here as the session continues. So we're getting some nice, good old-fashioned VIX erosion. I think we'll get into that conversation a little bit more in a little bit when we get down the line to some of our VXX talk. But first, let's talk about what's been catching our eye this week, and an interesting volatility week. Since you're beaming in the farthest, Mr. Rhodes, I will let you go first. When you haven't been, skinny dipping and doing all the fun things you tend to get up to over there on those tropical beaches, what caught your eye this week from a volatility perspective, sir?
Well, it keeps closing under 10. Why is it doing that? If there's so much fear and craziness in the world, if we're getting ready to isolate ourselves relative to the rest of the world because we're not a green country anymore, why is VIX so low? That's what's been catching my eye. Something else that I did that I'll follow up with this weekend, I had lots of time on the plane, and I like to play with numbers. I figured out that you're just as likely to do well selling volatility when VIX is at 11 as you are when VIX is at 20. And in fact, VIX above 30 is actually when it's tough to sell volatility. We always say that. We've heard the traders say that, but I actually quantified it on my flight over.
Oh, you did, huh? You want to share that with us now, or you want to save it for later?
I'm saving it for later. That's going in the blog this weekend. I'm not. You've already got a jam-packed show today.
Oh yeah, we don't want to step on the heels of the blog. We know how important the blog is to you guys over there. Check it out if you haven't, listeners. At CBOE blogs. Just search for CBO or search for CBO blogs or search for Russell's names. You'll get the links to not just Russell's, but Kevin, everybody else who blogs for you guys over there. Some good stuff, if we do say so ourselves. So if you're forced for some reason to leave our site, you can head on over to there. It's not a bad alternative for you. All right, and Mr. Meatball, same question for you, sir. You commented earlier, bit of a quiet week. What's catching your eye this week, sir?
You are looking at it. It has been a snoozer. I've been trying to find something to do. I guess the one piece is that with the VIX low, I feel like vols are, the spread between the futures and the cash is a little wide still. Yeah. And I also have to say I'm a little bit surprised that we didn't see more out of the vol futures when they announced James Comey speaking on the 8th. I would have expected the June futures to have,
or the June 14th maybe.
Yeah, that was the ones I was looking for to do something, and they did not.
That's funny.
Which surprised me. You know?
Yeah,
so that's what I was looking for.
Kind of commented on that on Option Block yesterday too, kind of how we were all still surprised that none of this was bumping. Speaking of things not budging, when we were putting together the notes and the outline for today, we were just pulling up some of the numbers, and we literally almost could have cut and pasted from last week. The numbers, VIX Cash is almost identical to a little bit lower, slightly lower than where it was last week. VVIX, almost identical, I think within a point of where it was this time last week. So it is kind of interesting to watch. We are kind of seeing a little bit, at least, of a repeat after we saw, that nice spurt, nice explosion of volatility to the upside with all the initial news about Trump and all the potential, the special counsel. It since has just done nothing but erode, once again showing there's no lack of will out there in the marketplace to just crush a bunch of volatility whenever that is possible. Ophir, last but not least, sir, what is catching your eye this week from a broad volatility trading and analysis and trending perspective, sir?
I would just say the resilience of the market. I mean, back at the end of March, we were, 11% VIX, and we saw that spike to almost 16 by the second week of April. Then, it was quiet again. It's easy to forget, but it was just like May 17th, we saw a 50% one-day VIX top, right? And then we're all the way back down now to historic lows, 7-year lows. So it's the speed at which the VIX drops, even when it spikes, and the resiliency of the market that is just, it makes for a boring option trading environment, but just looking at the VIX in and of itself, it's pretty breathtaking. Also, I agree with Mark. The steepness of the curve, the VIX futures, it's starting to grow a little bit, which that could possibly point to some instability in the future. But that's kind of what I'm looking at.
Yeah, it has been interesting. We commented on that on last week's show as well. In fact, we had some listeners, I think, chime in during the show with some data as well about how when VIX Cash tends to get in this range, well shy of 11, even shy of 10, that's when we start to see that, it's almost an oddly counterintuitive effect of that steepness of the front portion of the curve gets pretty dramatic because there's only even though we joke about people not having any reticence to crush vol, there is a certain reluctance out there in the futures to really crush them beyond a certain point. So you see this weird conundrum where the cash just continues to erode and the futures tend to be a little bit sticky. Hence, it's a little bit less than it was last week. We're seeing it was about 2 handles between the cash and the front month last week. Now it's about 1.7 or actually about 1.8 or so right now. And it was about 3 last week for the 2 months out. It's about 2.7 or so right now. Still remarkably steep and probably surprising to a lot of people who don't watch this on a daily basis, but a little bit less than we saw last week. So maybe, who knows, maybe perhaps the worst is easing, or perhaps they're deciding they have to just keep crushing these futures because the cash just continues to drift and there's only so much you can do to prop those futures up. Other areas of the space, the Skew index still, again, we almost joke we could have copied and pasted from last week. It's within a point of where it was last week as well. So we're seeing a lot of repeats out there in the landscape, the vol space. One thing really quick of note before we get off the VIX futures again really quickly. I was looking, the OCC came out with their numbers and they put out how they also include in their listed options numbers what they clear a lot of futures over there. And people don't think of OCC as clearing futures, but the primary product that they are indeed clearing is indeed the VIX futures, and May was a record month for them with a 61% increase from May of last year. Last year they did about 8.3 million contracts. This year, about 13.5 million contracts. Again, the lion's share, if not all of that, I think Russell can speak to that more, is pretty much VIX futures. And year-to-date ADV for that cleared futures is up about 53% from this time last year. So I guess a good time to be in the VIX futures business over there, certainly for OCC. Russell, do you know, do they clear? I think they pretty much all they do is clear you guys, right?
There's one other exchange that it's a secondary exchange, but easily the vast majority of futures cleared by the OCC are VIX futures.
So there we go. Good time to be in the VIX futures biz there, as the numbers don't lie. And, everyone's funny. Just a couple of weeks ago, and Russell, you were down there as well. Just a couple of weeks ago at the big OIC conference, and you guys can listen to it on our network, there was so much hand-wringing about where's the volume gone, what's so terrible, the business is so concentrated, and where's the new entrants coming from, there's no market makers. There's a lot of dire prognostications going on down there, quite frankly. And now to see the numbers coming out from May, granted, it was probably a couple outlying data points that drove a lot of those numbers, but still, May was a pretty strong month, and so maybe there are some glimmers of hope out there in the darkness. Now we're talking VIX futures. We know dealing with that typical contango has some problems for some products out there, including our much beloved / much maligned VXX. You guys trade VXX like it's going out of style, so you guys all love it. We've debated to death what the heck actually causes that erosion. We won't get into that today because that's another 2-hour discussion. Go listen to some of our archives if you want to hear us or a bunch of our researchers talk about that, or even we had Bill Valentine recently doing his own version of it. So we've heard about 15 different versions of why VXX erodes. The point is it erodes, and interesting stuff. And I know, Ophir, this kind of came on your radar lately because you guys are always tweeting out and putting out interesting trade setups and analyses with your CML Twitter account and with website, because you guys do a lot of back testing out there. And it seems like recently VXX came on your radar. So why don't you walk us through what attracted you to VXX this week and what you guys found with all your back testing?
Sure. So, historically, VXX just gets crushed by virtue of the fact that it's, we're in a contango environment, so it's selling front month futures and buying the second month futures to maintain that 30-day weighted average. And so you'd think, well, if we're going to trade options on the VXX, so a derivative on top of many other derivatives, if you're selling call spreads weekly, so the weekly call spreads, let's say an out-of-the-money call spread, so say a 40-15 delta, something like that, obviously it's been working for several years, but there's been, every time we see the VIX pop, like when the VIX went up 50% in the day about 2 weeks ago, it's going to hurt that trade. But what's interesting is that this trade on a weekly basis works very well, but if it doesn't work, it doesn't work quickly. So if you're putting in, let's say, a 50% stop, then you might get stopped out on a Monday or Tuesday and just avoid most of the disaster. And if you're doing that, selling this call spread, this out-of-the-money call spread in VXX every week it's just printing money, and it continues to print money even in the weird environments where we see VIX go from 10 to 15 in a day. And obviously, when we're in contango and VIX is at all-time lows or near let's say 7-year lows, it would make sense that this would work. But you throw in a stop loss and the returns are 2 or 3 times better because you avoid the bad week very quickly. So it's a strategy we've been watching. It wins twice as often as it loses, and it's been returning, big numbers, 75%, 80% a year if you're doing this weekly call spread with a stop loss. And so that's what we were sharing. And it's remarkable to watch it work, and it's also remarkable to see the dynamics of VXX when VIX changes. Exiting the trade quickly helps the strategy work. Sort of caps the losses and makes the wins, allows you to keep all the wins when you're selling the spread. So that's what we're looking at, what we're continue to follow, and sort of the remarkable reality of how it continues to work, with the caveat, of course, that, we're in an all-time low VIX environment. So, it should work, but that's what we've been looking at.
It's kind of funny you mentioned that, because we've joked about the VXX trade being one of the more set it and forget it reliable type trades out there in the marketplace. I mean, your proverbial grandmother from Iowa could buy a VXX put, a long-term one, put it in her IRA, and chances are in a couple of years she'll be looking pretty good. There are not many trades out there you could really say that for. But that's usually been the way people tend to play this thing. It's a nice long put spread or maybe some puts to the downside, and they trying to capitalize on that erosion. But it sounds like your back tester is showing that selling the call spreads, again, you got to be a little bit more active on that front, but selling the call spreads outperforms the puts, or how does that work over the long term?
Let's take a look. I'll click a couple buttons. So, yeah, buying puts is going to do better. I mean, this thing just, you're right. I mean, for anyone who follows it closely, right, the price just keeps resetting, and
yes,
it's down like 99.9% or something. So buying the puts is reasonable and will likely win more often, but not as reliably as you would think. So obviously, if you're long a put, then you've got for all intents and purposes a large upside because of the downside. Whereas with the call spreads, you're kind of limiting it. But I'm not sure you want to tie up capital for that long. I'm not sure that the VIX environment, I mean, I suppose we could have said this a year ago and I'd look like a fool, but I'm not sure that the VIX environment is going to stay this consistent. And if you're not really sure about it, then maybe you want to do slightly shorter term trades. But yeah, I mean, I don't know. The VXX is a crowded trade, and it should be.
It is a crowded trade. Yeah. It is a crowded trade.
I don't know why the rest of the world doesn't pick up on it.
Well, what's crazy is as bad as VXX is, UVXY is more than twice as bad, and that's usually where I play. And I found that in that product in particular, put buying is far more superior than dealing with the call spreads, and safer. Because the one caveat to these names is you sell a call spread every month, and it looks great until something really bad happens, and you can lose a lot very quickly. Whereas the nice thing about owning a put, why do people buy puts in the first place? Because they are
so they can sleep at night.
They're trying to protect themselves, right? It's a hedge. So, I look at this as being a much better way to hedge a trade than hedge and be short than, call spread. And now I'm a VIX call spread seller. I do a ton of that in my hedge fund. But I also do puts and put spreads because there's a certain amount of safety when vol spikes. You got a lot less to worry about owning a put than being short call spreads. And I think that's maybe one of the major things that I kind of think about when I'm trading.
Mr. Rhodes, I know this one is kind of coming on your radar over there in Honolulu, sir. What do you think about our perennial favorite here, VXX?
Well, first off, since the put topic came up, when you're buying the short term, I like the point that was made that you only need one spike day to kind of ruin that trade. Whereas you can still weather things a little bit if you're selling slightly out of money call spread, which I know is what we're talking about. I've done something similar that doesn't trade nearly as often, where I'll say VXX is up 15-20% over the last 5 days. If you sell an at the money call spread, you got about a 75% chance of making money off of it. But I like this one because it's more consistent. Whenever I bring mine up in presentations, I always get the inevitable, have you tried that with SVXY or UVXY? And my answer is I'm old and I don't change my ways, and I have been paying attention to VXX because it was the first one. Ophir, have you guys done anything with the other funds at all, or just going along with the assumption that what works with VXX is pretty much going to work with the other guys as well?
There are differences. Mark's right. I tend to look at the VXX. I don't know, it's psychology. I don't even know why I do. I looked at the UVXY as well, but they do move together. It's similar ideas, different constructs. I like the VXX. I feel like there's decent liquidity, and this is, I don't know, there's a part of me I almost can't believe the vol that we're in, even though it's been persistent for years. So I tend to go shorter term, whereas, if we're in a normal volatility environment, whatever I think that is, I probably would not be trading weekly options. I'm not trying to give my broker commissions. But we look at all of them. We try to also keep it. I think VXX is probably as far as you can go for, probably 90% of the market. You start getting to UVXY and things, you're going to start losing people in terms of, what is the instrument and what does it do? And so that is a part of what we do. We try to engage the public as opposed to kind of go into these sort of even more unusual instruments that, they're all similar. They go down.
Yeah, they are similar. Just UVXY is so much worse, which is double short because of the daily rebalance thing on UVXY just completely changes its ability to perform. It will make massive one-day moves, but over the long haul, that thing is just a heaping pile of decay.
Yeah, heaping pile of decay. I like that. Well, interesting stuff. Ophir, we like to. We like to bemoan VXX every now and then here on the show, and there are some ways to play it. But it sounds like you found an interesting alternative. Again, if you're down with the caveats, if you can handle, because as you mentioned, there are some moments where that could come back to bite you. So it's certainly not as set it and forget it as just buying some long-term VXX puts and calling it a day. But if you listen to a show like this, you're probably on the more active side of the spectrum anyway, so you can handle a little bit of putting them some stop orders and babysitting your upside a bit. If you're into the more active side, then this may be a more perhaps compelling way to trade VXX. Check out what Ophir and his gang are working on in addition to VXX. They talk about all kinds of names, not just VXX over there. I believe it's cmlviz.com. Did I get that right, Ophir?
You did. Perfect.
All right, there we go. Check him out over there. Meanwhile, though, we're going to keep on rolling. Ophir's going to stay with us for the whole show. He's a stalwart contributor here from a vol perspective. But now, even though he's been on vacation, it's time for Mr. Rhodes to pull away from the beach and from his adoring pigeon fan base and regale us with, check out his Twitter if you don't know what I'm talking about, listeners, and regale us with at least 30 to 40 minutes of weekly VIX options activity. Yes, it's time for Russell's Weekly Rundown.
Now, Russell's Weekly Rundown.
All right, sir, you know what to do. The pigeons are waiting. The floor is yours. Have at it, sir.
I want you to know that my audience doubled, and I had to shoo them away.
Awesome. See, we're huge. We're huge with the pigeons. I knew it.
The second we started, a pigeon just landed there on the balcony and was staring at me. All right, so there was some weekly option activity in the VIX arena worth talking about. I think I picked up on somebody that started something interesting on Tuesday. They bought the June 21st. I know that's not a weekly. They bought the 9 calls for 304, which is a great way to replicate the futures, especially if you're thinking about doing like a diagonal spread or which is what I'm getting ready to mention, or even something that kind of looks like a covered call, the deep in the money, and you don't have the ability to mix up the futures and the options like most people don't have. Deep in the money calls or deep in the money puts are a great substitute for a long or a short futures contract. And I've got examples of both from Tuesday. Somebody bought, again, the June 21st 9 calls for 304. They sold the May 31st, which have already expired, 11.5 calls for a whopping 12 cents. I am assuming that they're probably going to sell more short-dated calls. Unfortunately, this is a round lot of 1,000, so it's kind of tough to pick up on follow-up trades on that. Those 11.5 calls did expire out of the money. I think our settlement was 10:58 on Wednesday morning. Then somebody also the same day bought the June 21st 18 puts and paid $625 for those. And then they turned around and sold the May 31st 13 puts for $249. They actually, if they held those 13 strike puts through the settlement, they made a 7-cent profit on those short puts. Again, this might be something that they add on to, or maybe they're just trying to cover part of the cost and didn't cover nearly as much of the cost as they wanted to on that one. But kind of a getting a long and short position with the standard expirations and taking in a little bit of premium by selling a call or a put against those. Both those came up Tuesday. On Wednesday, the scaring the heck out of me trades popped up. Somebody sold a bunch of the June 7th 18 calls for a dime. Didn't look like it was tied to anything. A little bit later came in and somebody sold a bunch of the June 14th 19 strike calls, taking the other side of what Mark Sebastian brought up earlier, that thinking people might need to be worried about that expiration. They sold the 19 calls for 15 cents. Again, doesn't look like it's tied to anything. And then today, one of the biggest trades to come into the pit, somebody sold 19,000 of the July 5th 22 calls for 20 cents. Again, not tied to anything. Naked short-term call selling makes me quiver a little bit. But so I say that multiple times so that people realize this is not an endorsement of those trades. This is a reporting of those trades.
Yeah, those are the kind of trades we love to hear on the show here. Just straight up naked upside risk.
Yeah!
Net short units, baby. Because if you enjoy sleeping well at night, net
the
short
coconut
units.
bra of option trading.
Yes, there you go. I like a good analogy as always. Well done, sir. From the beach. See, even from the beach in paradise, listeners, Russell can scrabble together some interesting and sometimes some disturbing VIX weekly options activity. And there certainly was some in the latter category out there this week. Moving on to the mothership, the big VIX options. What was lighting up the tape this week? It was another fairly quiet week, all things considered. Of course, we had Monday off, was closed here in the States for the Memorial Day holiday, listeners, so no lighting up the tape there on Monday. And the rest of the week kind of struggled, to make up for that. Tuesday, about 250,000 contracts. Wednesday, about 550 or so. Thursday, right even shy of that 250,000. And today, let's see how we're lighting up. So far, about 350 on the tape so far today. So pretty much every day this week, well shy of that ADV, which is hovering right around 722 right now. VIX Call put getting a little bit heavier, about 3.2 to 1 calls over puts. So getting into Russell's danger zone. I'm sure he's quite worried over there in the beach on the Honolulu. He's sweating. He's checking his graph because we all know once it hits 3, he starts freaking out. So keep an eye on that for all of you out there who pay a lot of attention to such things like Mr. Rhodes. Moving on to the hot strikes, the number one with the bullet strikes that were lighting it up this week. Let's start off here in the area where all things are going crazy here on my screen right now. So let's see if I can navigate around this while we keep on going. Number one with the bullet this week was the June 30. So once again, all that love for the upside, listeners. People just can't get enough of this VIX upside. Still not as much as it was, shall we say, a few weeks ago when our friends were out there just loading up on the 30s and 35s. But they still are number one and number two with a bullet again this week. Number one, the June 30s with 337,000. Number two, the June 35s with just a tick under 300,000, 299 to be precise. Number three on the list as I regain control, wrestle it back of my screen here, listeners. Things are going crazy in the studios. June 15th, so a little more conservative, shall we say. 277,000 contracts. Number four, the June 20s, right around 250,000. Number five, the June 16s, nice June call strip here, 220,000 contracts. Number six, the June 19th with 215. Number seven, the June 17th, so we're getting down there, 185. Number eight, the first and only puts on the list, the lovable, adorable June 11 puts, 184,000 contracts. Number nine, back up to the 20s, the June 25s, 175 or so, and rounding out the top 10. Pretty much, we can just call it our June call strip. That's where all the love is this week. The June 18s with 171,000 contracts open, a total of about 8.4 million, about 6.4 on the calls, and about 2 million on the puts. Before we keep on rolling, Ophir or Mark or even Russell, anything else catching your eye out there this week from the big VIX mothership options, or should we keep on rolling into commodities and earnings and other fun stuff?
No, the one thing I will say is that markets appear cheaper for VIX call options than they actually are. I've been quoting up stuff all day, and the way the market makers have lined themselves up, they will pay a lot of times on different types of spreads. They'll play through the mid price on that stuff, and then they only want to sell on the offer. So I would say that at VVIX is reading what, around 85. Vol's a little stiffer than maybe some of the different measurements out there are picking up. The pit really does not want to sell anything right now. So take that for what it is. But that is my kind of my takeaway from a lot of the action that I've seen this week.
All right, anything catching your eye out there, Mr. Ophir, before we keep on rolling?
This week I'm going to have to say not a whole lot. I suppose this 19,700 in the July 5 22 calls that we were just talking about, but no, nothing particularly interesting, I'd have to say.
You're too busy slinging the VXX call spreads, huh? To look at the mothership VX. I got you. Mothership VIX. But it was interesting stuff going out there in commodity land. We saw the vol kind of hovering about where it was last week here, a little bit up here in terms of the commodities, in terms of the one you guys all like to look at, which is of course crude, OIV, and OVX. Right around close to their levels from last week, a little bit higher, 29 in the OIV, 31 out there in OVX. If you like a deep dive into all things commodity volatility related, I encourage you to stay tuned in about a little less than an hour for TWIFO. We get into all that fun crude. I think we're going to be talking a little silver this week, a few other names on the horizon, what's paying the rent, crazy trades, your questions, all kinds of fun stuff. Stay tuned for that, Mr. Rhodes. I know you've been busy. You've been traveling, and it's kind of been a light week from an overall earnings perspective, but I know you like to delve in those areas. You're always blogging about earnings volatility and things. Anything catching your eye this week from an earnings vol perspective before we get on to letting the inmates run the asylum?
No, let the inmates go.
All right, the inmates are chomping at the bit. So without further ado, let's get right to it. Let's check out our volatility voicemail.
It's time to share your thoughts and opinions with your fellow volatility traders. It's time to check the volatility voicemail. Make your voice heard by dialing 779-669-4VOL, posting a comment on the optionsinsider.com, sending an email to questions@theoptionsinsider.com, or posting your questions to twitter.com/options. or facebook.com/theoptionsinsider.
All right, everybody, welcome to the volatility voicemail. I was just joking about the inmates. It's more of the pigeons are running the coop this week, because we know we're big with the pigeon contingent. You know, we like to ask you guys questions on this show sometime every week. Last week we asked you, it was a bit of a weird development last week. We asked at the beginning of the week, we said, hey, at the time, VIX Cash is right around a little over 11. The June future was about 12.5. The 11 puts are trading 15 cents. 13 calls were also trading 15 cents, expiring that week. And we said, hey, what do you guys want to do? And everyone overwhelmingly said, buy the 13 call. And what was interesting about it is that VIX continued to erode throughout the entire week, and yet more people piled in to buying the 13 call. I think when we talked about it last week on the show, it was right around 40%. By the time the poll ended at the end of the day Friday, so a couple hours after the show, it was actually up to like 43 or 46%. So more people were piling in to say they wanted to buy that 13 call, even though it was clearly going the way of the dodo that day. C'est la vie. There are some upside VIX lovers, shall we say, in our audience out there. They just can't get enough of that there VIX. This week, we were talking, this is actually right up your alley, Ophir. We were talking about Google, about Alphabet, and what everyone's talking about Amazon. Will they, won't they? They did break the 1,000 level. Will Alphabet do the same this week? That was the big question. Of course, it didn't look too good for their chances towards the end of the week. But we asked you at the time, the 1,000 call expiring this Friday. So today was about $4. The 1,000 put was about $8. What did you want to do? We asked you if you want to sell the 1,000 call for $4, buy that 1,000 call for $4, sell that straddle, the 1,000 straddle for $12, or sell the 1,000 put for $8. Ophir, I'll let you go first. What is your pick? And then what do you think is winning our poll, if you haven't cheated and looked on the social media? And then also, I know you, I think you responded with some your own idea, which was selling out of the money put spreads in Alphabet. So if you want to regale us on why you like that route instead, have at it, sir.
Sure. I just think that given what was going on in the media, there's a gravity to 1,000. And if there's gravity, then you can sell a straddle if you really love risk right at 1,000. Or you can sell out of the money put spreads. This goes with all of megatech, right? So let's say Apple, Alphabet, Facebook, and Amazon. And the Amazon quote is broken. There's a comma in it now. They're so resilient. Maybe they don't go up in a week, but they just don't go down a lot. And you're looking at 2-3x returns, including margin, if you're selling out of the money put spreads, let's say every month, even if you're putting in a stop. And that's just working. For this week, if I had to choose one of those four, I probably wouldn't have gone naked straddle, but I probably would have sold the 1,000 strike just because it felt like, there was gravity to $1,000, and that's exactly what you want if you're selling that strike. So that would have been, if I had to choose one of those four, that would have been my choice. And my best guess is that people are probably buying calls. That's my best guess.
People do like to buy some calls. Mr. Meatball, same question for you. Obviously, we have the benefit of hindsight now that the week is mostly behind us. But what would your call be, and what do you think is winning with our listeners? Again, remember, they sometimes do some bizarre things, like continuing to buy VIX 13 calls even when they have no chance. So remember, keep that in mind.
People are weird that way, aren't they?
It makes a market, right?
Yeah, I'm certain that it's call buying. And I tend to agree with Ophir. I would have liked. I would have been very interested in that one, in the selling the straddle. If you'd put out like bull butterfly, that would have been my other one. But
unfortunately, only four
I
choices.
think you hit the nail on the head.
Yeah, only 4 choices. Twitter limits us to how deep in the weeds. We can't say iron condor swaps or anything cool like that, so we limit them to 4 pretty straightforward choices people can wrap their heads around. Last but not least, Mr. Pigeon aficionado over there. What is your vote, and what do you think is winning?
The Pigeons, they got bored and left. I would go with selling the $1,000 put for $8. I wouldn't be comfortable with selling the call. I don't like buying options, so that kind of eliminates selling the 1,000 call for $4 and selling the straddle for $12. I mean, I'd be okay with being forced to buy some shares of Amazon, and then I'd probably turn around if I got stuck in this whole thing and sell calls to get out of it sooner rather than later. More concerns about the market than anything else, but I would go with the final selection, sell the $1,000 put for $8, and because I know that our audience is just as smart and savvy as all of us on the line right now, that's probably what they would do as well.
Yeah, with a few hours left, our audience, they're loving the calls, buying the 1,000 call for $4. I'm guessing I don't have like I said, my screen is kind of going crazy right now, so I don't have a live quote of Alphabet, but given how it was trending throughout the week and today, I'm guessing that par call is not exactly lighting things up. Actually, $9.95, so the stock is up quite a bit today, about almost 1%. So that call is more relevant than it was, shall we say, a day ago. But still, yeah, 40% leaning that way, 20% saying selling that 1,000 put for $8, 21% saying selling that call for $4, and about pretty much the rest are all evenly split, right around 19% selling the straddle for $12, which actually looking not that bad. If you could held out for the rest of the entirety of the week, you did all right. Let's see what else. We got some comments. We got Gabe Rich comment on what we were saying earlier about breaking down. Do we want to trade VXX buy and put spreads or selling the call spreads? He's chiming in from the dark side contingent, the premium selling contingent, saying, premium's always nice. I do kind of, I see what you're coming from. Collecting is sometimes better than paying. I get you. I know a lot of you out there feel that way. So there you go, Ophir. You got some love for the selling the call spreads rather than buying the put spreads. I knew all of our dark side listeners out there, they would love that one. Now, speaking of people loving stuff, Mark, people liked your, shall we say, weird rhyme, rap, call it what you will, last week. We got this great image. We'll have to share it on Twitter from whoever sent this in. FContangotrader. He's written in before with the great, he has your rhyme. He says, I'm very impressed from Mark and his poetry and ABC options and Uber rhyme. And he has a great image of an Uber driver standing here with Mark's little rhyme here saying, if you don't buy options when the cheapness is super, you will end up driving for Uber. I don't remember you quite saying it exactly that grammatically incorrect, but c'est la vie. So Mark, there you go. Your rhyming has found a fan base of one.
Well, there you go, as it should, because my rhyming is awesome.
Some might say your rhyming is super.
Yes, my rhyming is superb. It's amazing.
So there you go.
So yeah, that was a fun one. We were talking about the old, people that sell cabinets end up driving, or sometimes called cabs, end up driving cabs. That was the big hilarious joke that I had.
Yes, and now the modern version, because we know no one takes cabs anymore. It's all Uber's the modern version, being driving an Uber. So well done. On Seat of the Pants rhyming here, at least you can expect from Volatility Views. Our old friend here, Production One, chiming in as well. He's a fan of yours as well, Mark, saying your long 1 week SPX straddle hit. So way to go. I don't know when you closed it out, but there you go, getting some chance. He also chimed in, which is an interesting point. I don't know if I quite agree with it, but I see what you guys think. He says, he also chimes in, if all options were European style, we could see a 50% rise in retail volume. He listens to this show. He's on a little bit more sophisticated spectrum. He says, I only trade SPX and VIX. Traders don't need the hassle of assignment risk. I think that latter comment may have come in on the heels of some of the OIC shows we did last week where everyone was kind of wringing hands saying, how do we get retail back? His silver bullet for that is getting rid of the assignment risk. I don't know. I don't know if your mom and pop Joe Retail, your proverbial grandmother in Iowa, is even that knowledgeable or aware of. Certainly the high-end guys are. But are they really not trading options because they're afraid they're going to get assigned? We did have that one guy a couple months ago in Option Block write in, and he got assigned on his short put spread, and it was a very scary experience. So maybe for that guy and the people out there who had that, maybe. But it still worked out for him. I just don't know if that's the big stumbling block I don't know, Mark, we'll let you go first because he directly refers to you. How did your 1 week straddle go? You had it over the weekend, I believe. Did you carry it throughout the week, or did you close it out? And then what do you think about if we all went European, retail would flock to the markets?
Yeah, the straddle, it expired at like midweek, but it did work out. It worked out well. I sold, but I had to leg out of it, so I did the puts first, then the calls. That's
always the way with straddles, is it not? If who gets out all straddles at once? A neophyte, an idiot. No one does that.
Right, correct. So that's what happened, and other than that, it was all good.
How about European versus American?
I think that's a load of hooey. I don't think that matters, and anybody who's going to actually be actively trading options, that's not going to affect them. All right. There may be a few people because assignment does scare retail traders, but once retail traders kind of get options, they stop worrying about it. That's kind of what it comes down to.
Ophir, any thoughts? You think if we all went European, that the retail volume would surge to record new levels, or are you on Mark and kind of my side that maybe not so much?
No, I don't see that. If we went European, and I mean, if that's the case, I mean, how often? Let's talk non-VIX. Let's just talk equities. If you're getting assigned on options, what are you trading? And also, if you're getting assigned on options, it's probably good for you. They're probably handing you money. So no, I don't think going European would do anything.
Yeah, and that's kind of what we walked our listener through a couple of weeks ago on the option blog. He got assigned and he was freaking out, but we actually explained to him it was a good thing. That's usually, you're right, 90% of the time, if that does happen, which is a rare circumstance in and of itself, it's usually a good thing. You have those weird gap scenarios where maybe not, but aside from that, it's usually not a bad thing. Mr. Rhodes, as the duly appointed representative of all things European here on the program, do you agree with this sentiment, or are you on the contrary seat like the rest of us?
I totally agree with you guys. Why would I fight such a brain trust?
There you go. Well said, sir. Smart comments as well. Let's see if we have time if we have a quick one. I love the questions we got. A lot of them are very in depth. I don't know if we have time for. Let's see. Oh, here's a really quick one. This came in last week. I'm gonna put you on the spot here, Russell. This came in during the show last week. We didn't have a time to get to it. It was a quick. Oh, it was a Javier LBC. He said, "Hey guys, I'm new. Found you on Stock Twits." He asked if we saw last week's. This is last week's volume. 36,000 SEP 25 calls going up on VIX. Like I said, I was busy running the show. I did not see them. Mr. Rhodes, did you notice this SEP call volume? Did it come on your radar last week?
And I noticed that trade. Actually, I noticed that trade because I read through the questions that you send us ahead of time.
Smart man.
You know, I couldn't get a gauge from the fellas on the floor what that one was all about. I feel like it definitely wasn't just something somebody was throwing out there without adding something to it. But I definitely, gosh, it's not something I would think about going out there and buying. And in fact, I think they may actually be paired with the September 29th options. I think something went along there. And the only reason they use the September 29th is because we've scared some people away from the September 30th. But right now you could buy the September 29th for 50 cents and sell the 35s for 25 cents. So you could get some really neat long volatility exposure if we get an event going into the fall. I do think that open interest is skewed a little bit to the higher strikes when you start talking about September and October. For no other reason than the illogical bad things seem to happen to the markets in the fall. So that might be something along those lines as well. But from what I can see, I think they actually might have been selling those guys.
Interesting. See, listeners, if you're patient, even if you chime in live during the show, we'll see if we can get to you sometime in the subsequent week. We get a lot of questions here, but we love them. Keep them coming. Keep hitting us up. You know how to do that. Meanwhile, it's time for us to dive into the most dangerous and difficult part of the show. Yes, it's time for the crystal ball.
It's time to peer into the future and reveal what the volatility gods hold in store. It's time to look into the crystal ball.
All right, everybody, welcome to the crystal ball. Like the man said, the portion of the show where we we grab that slippery VIX pig and we try to wrestle him down for the week to come. He's a slippery one. He's been running all over the place the last few weeks. And as we came in last week, it was a nice 1-point spread. We had the meatball on the downside, 975. We had me 10.25, right in the middle actually. And then Mr. Rhodes was 1075. Of course, he's the upside buyer. Looking like that 975 working out pretty good for you, Mr. Meatball. You're right about a 1/10 of a point within that range or so. So not bad. Given how slippery VIX is, that's pretty much a bullseye. So well done. Normally, this would be the portion of the show where I say you get to go first, but we have a guest, so I'm going to let the guest go first himself. Give him the dubious honor of going first here on the Crystal Ball. Ophir, you know the game by now. This is where we attempt to guess where VIX Cash will be this time next week, 1 week from today, at the close of the show. What are you feeling, sir?
I'm gonna say 10%. I'm gonna say VIX is at 10 next week. Basically nowhere.
Even 10. Okay, I like it. Nice even 10. So unched. Yeah, I mean we've done that before on the show. We've certainly said unched from week to week. Mark, you came in first then, so you get to go next. What are you feeling this time next week? You feeling higher? You feeling unched? You feeling a little more erosion? What are you feeling?
I'll tell you, we have kind of the whole Comey stuff next week. That's, he's going to testify next Thursday. So maybe we do see VIX above 10 midweek, but then just more utter disappointment for volatility bulls, otherwise known as Russell Rhodes's. And I think we're going to be 963. So it's going to be the lowest VIX
setting some new lows
potentially in history.
Setting some new lows. I got a feeling we're going to be kind of clustered this week because there's not a lot of room to play this week. I don't think anyone's going to be. Well, maybe Rhodes. You never know. He might be in the 12 level. I came in next closest, so I shall go next. And yeah, so we got a nice spread of 10, 963. I was liking, I hate to be this close to everybody else, but I was thinking, we've seen the Comey thing not really materialize before. We've seen the Trump thing not really materialize before, except for these weird little momentary blips, these momentary aberrations, and then it's just crushed all to hell yet again. So I don't hold out a lot of hope for this any vol we get remaining throughout the end of the week, a long way around to me saying I was feeling kind of like Ophir was saying unched. I was feeling unched as well, but a little bit shy of where he is. Since you're 963, I wasn't going to go that low anyway. That's pretty aggressive. I would like right where we are about this time next week, which I'm going to say right about 9. I'm going to give you a little room on the downside. I'm going to say 975. There we go. You get a nice 0.12 of a point to enjoy there, sir. Mr. Rhodes, are you going to try to squeeze into this ever-tightening gambit, or are you going to be our upside guy again, go 13 or something?
No. Next, on June 6th, next week, not only am I speaking to the Honolulu Option Trader Club, which is referred to as HOT. I like that.
I do like that.
On the 6th, we get the JOLT employment report. You guys know what the JOLT report is? Is the Job Openings and Labor Turnover Survey from the Bureau of Labor Statistics. And I think JOLT is going to jolt VIX to the upside, so I am going with 1060.
Whoa.
What a surprise,
Wow.
Mr. Rhodes.
I'm going to start coming up with reasons. And then I have something else to say.
Reasons.
Okay,
Who
what do
needs
you got to
reasons?
say?
All right, and everybody has to be quiet. Okay? And you know who I'm talking to.
Probably me.
I said you had to be quiet.
Oh, sorry.
It's like the last clap contest at the concert with Mark Sebastian. So, Mark Sebastian has quite a gift. With a mouth like that, he'll never work for Lyft.
Oh,
I like
there
that.
you go.
I'm in.
I'll run.
I like
So
it.
maybe
Well
we
done.
need. Russell is editing my book that's coming up. Maybe we need to get that into the book somehow.
There you go. I think we should have a rhyming section at the back of the book. Speaking of the back, we've reached the back end of this episode. That music means it's time, unfortunately, listeners. I know Mr. Meatball suggested a second Vol Views later in the day. We'll have to see if we all have the stamina for that. But that's going to do it for this one, at least, the first episode of Volatility Views. If you're going to be around in half an hour, tune back in for TWIFO This Week in Futures Options, where we break down all the good fun and the volatility side, the other side of the space. So we're talking crude, we're talking silver this week, probably some other products floating in there. A bunch of your questions, going to be pretty good stuff Stay tuned for that. We'll pipe in some options news rundowns for you before we get all that going for you. But before we go on this show, let me check back in with my cohorts, my partners in crime, see what they have cooking for you. Mr. Ophir, as our guest, you get pride of place, sir. If people are intrigued by all the back testing you were talking about here on the show, where should they go? What should they do?
Yeah, so you can go to cmlviz.com, no www in front of it. That's also our site, but that's our portal. So just cmlviz.com, and you'll see some videos. You'll see how to trade before earnings, how to trade after earnings, how to trade avoiding earnings, how to trade during earnings. And, if you've ever wondered, should you trade monthlies or weeklies or avoid earnings or trade earnings, or should you sell spreads or buy spreads with high vol or low vol, test it. Give yourself some objective data to give yourself some confidence on how to trade options. So that's my go away word. That's it.
There you go. Check him out. And you too can back testing all the rage these days in the options world. Check him out. If you have a strategy, you want to say, how does that work? Go find out. Check out Ophir's stuff over there at, I had it here before. There we go. CMLviz.com. Of course, you can follow him, Ophir Gottlieb, over there on the Twitters as well. If you can spell it, it's a good challenge for you. All right. And Mr. Meatball, same question for you, sir. What's cooking in the land of the pit and Carmen line?
Things have been good. If you're interested in volatility and getting volatility exposure and you don't know how to do it and you want someone smart like me to do it for you, and you're a qualified investor, come and reach out to me at Carmen Line Capital. And I will gladly speak to you about whether it's an appropriate, place for you to work with us. Let's just say that.
Or if you also have questions about where space begins and the atmosphere ends, you can also contact him as well. It's a very fluid area of the space. But Mark Sebastian, not very well known, a world's foremost expert on all things atmospheric science.
Yes, I am.
I bet you didn't know that, sir. I just added a new title to your LinkedIn profile. And last but not least, when he's not hot in Honolulu with those hot options traders, again, that's our acronym, listeners, Honolulu Options Traders. He's doing all kinds of cool stuff. Mr. Rhodes, what's cooking in the land of all things CBOE live vol?
I'm on vacation. If you guys are doing a second version of this show today, you will be doing it without me. Yeah, my wife's yelling at me in the background. Come on, let's go. So I've enjoyed it. I will be checking in periodically, but I will see you guys next Friday when I return to CBOE.
Well done, sir. You get the hats off award for the trooper of the show, beaming in from paradise on vacation. Who could beat that? And on behalf of Mr. Rhodes and Mr. Ophir, Mr. Meatball, and indeed myself, I want to thank all of you out there in the listening audience for downloading, streaming, and subscribing to the show. And of course, for sending in such many and varied questions. Keep them coming. You guys keep us on our toes every week. We love it. And we'll see you next time for more Volatility Views.
Volatility Views is brought to you by CBOE Live Vol. CBOE Live Vol is the leader in equity and index options trading technology, providing professional and retail traders with the most sophisticated options risk analysis, compliance, and trading tools. CBOE Live Vol offers a broad spectrum of advanced trading technology, including the Live Vol X, next generation execution platform, and Live Vol Pro, the new standard in options trading front ends. Visit livevol.com for a 15-day free trial today. And by Russell Investments, the home of Russell Indexes, which calculates approximately 700,000 benchmarks daily, covering 98% of the investable market globally, including more than 80 countries and more than 10,000 securities. Approximately $4.1 trillion in assets are benchmarked to Russell Indexes. For more information on Russell Indexes and RVX, please visit russell.com/indexes.
The preceding program was a production of the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.